In this video, I'm going to go over how fractional sharing works, who is it for, and why you should possibly do it. Yesterday, Robinhood put another nail in the coffin to these other brokerages. If you guys haven't already seen, Robinhood released yesterday that they are going to be doing fractional share purchases. This means that instead of having to saving up and waiting to buy a full share of a big company like Amazon, Boeing, or Google, you can simply buy a fraction. In this video, I'm going to go over how fractional sharing works, who is it for, and why you should possibly do it. Before we get into this video, if you haven't already, make sure you like and subscribe to this YouTube channel. It really helps the algorithm. From the beginning, Robinhood has offered free commission trading as well as free options trading. Now they are adding to their platform the ability to buy fractional shares. There are some brokers such as SoFi that have been doing this since about last June, but Robinhood saw that this was a huge market to go after. Robinhood has really stapled themselves as the everyday person's investing platform. Right now, I want to go over why fractional sharing could be good for you and really who would buy fractional shares of a company. Really, buying fractional shares are good for somebody who's beginning investing, who might only have $100 to $300 a month and they want to start a portfolio. Remember the video we made a month ago about how you can turn $300 a month into $1 million in 45 years? Well, fractional sharing could be good for you if that is your plan. Now, say you only have $100 to $300 a month that you want to put into the market and start investing. You could buy something like SPY, SPHD, VTI, or one of these other ETFs. And while that's great as a passive investor, say that right now you don't have a lot of money, but you want to be an active long-term investor in the future. You want to learn to analyze companies. You want to pick your own companies and really build your own portfolio. Well, this is great for you because you can buy fractions of big companies that you believe in, but you probably couldn't afford, and you can actually create your own index fund. I could also see fractional share buying for people who want to buy FANG stocks like Facebook, Amazon, Apple, Netflix, Google, or even bigger companies like Boeing or Tesla that have higher share prices that normally you wouldn't be able to afford. So say every single month you can only put $100 in the market, you could still buy fractional pieces of those companies. Now I want to go over how it works. Up on your screen is a screenshot from CNBC article. It says that the company plans to buy shares of whichever stock someone wants a piece of, divvy out that fraction of the stock, and then keep the remainder on Robinhood's portfolio. And when enough people want to sell it and they have the equivalent of one share, Robinhood will sell it off of their balance sheet. This also means that there's more risk and exposure to volatility, which the Robinhood CEO said something that they thought about before launching this. Now, I want to go over how I would use fractional sharing to invest. There are people who will buy fractions of 100 different companies and build their own ETF that way. And there's nothing wrong with it, but that's not personally how I would use it. If you guys haven't already seen before, I will link down below my video on diversification and where I stand as far as that's considered. If you are somebody who wants to become an active long-term investor, such as myself, even though I do day trade, this is perfect for you. Say you don't have a lot of money, but you want to own 5 to 10 different companies. And personally, I wouldn't go with any more because I don't think you can truly understand those companies. Having the ability to buy a fraction of a company allows you to treat each company like a full position investment, to learn about them, understand them, analyze them, and invest in them the same way that you would with a big portfolio. And the good thing about this is once you have those 5 to 10 companies, you can truly dollar cost average every single week into those companies. So say you have 5 companies and every week you can only put $50 into the market. Well, guess what? Every week you can actually put $10 per company into the market, and that's a start. And it gets you to start thinking about investing the traditional and true way while only being able to afford fractions of shares. Let me know what you guys think down below in the comment section. Is this something that you are going to use? Don't forget to like, comment, subscribe, shoot me a DM, let me know of any other video topics you want me to do in the future, and don't forget to be a part of my giveaway. I will link my Instagram down below. All you have to do to win the book giveaway is to be subscribed to this YouTube channel, to comment down below in that Instagram post 2 of your good friends who need to see this content, and that's it. Thank you guys for watching. Until next time, I'll see you.